journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm going to try to share. Oh, by the way, our guest today will be Jeff Huge of Alpha Insights will be our guest. This is the Russell going back since beginning of March. Remember this wonderful bullish report that the Federal Reserve pulled on us yesterday with the CPI number? There's no more inflation. Take the high that we had way back here on March the 2nd, folks, and just draw that line in. Look what it hit, folks. Do you see that? That is to the tick an exact 382 retracement. Now, look, this market's going to go down, but it's tradable. It's going to be tradable like this for several years. There's going to be wild swings up and down. Pay attention to these numbers, folks, because they'll lead you to the promised land. Now, there was the high. You came all the way down. I'm just going to walk this through you because this is the second largest of all of the trading vehicles. First is the S&P, second is Russell, third is the NASDAQ, fourth is the Dow. You see that move right there? That was 382 of that move right here. And then today, look at today. Here's this morning. You made a 382 of the high again with an A, B, C, D. You can't ask for anything better than that, boys and girls. These are the things I try to point out when I'm when I'm talking in videos and things, but sometimes maybe not as clear as I'd like to be, but there's your perfect A, B, C, D, and now we're coming down. All this tells us that we're heading down here, and then there'll be some more rallies in between. There's going to be rallies all along, folks, but get ready to look at A, B, C, Ds because they'll help you to get there. At least that's my opinion. Now, I wanted to point out that yesterday we had what I call a trade of the day, one that looks really simple, and it happened to be in the crude oil market. We'll get this up here. You'll be able to see it. There it is, right there. You can see just perfect A, B, C, D. It comes right down to the 61% retracement within a heartbeat, and then it hits that, okay, and then it rallies. Now, there's the high. So what we'll do now is to show you these numbers repeat over and over again. We're going to go down to a 13-minute chart so we can see that bounce, and there's the bounce right there, okay? Is that correct? No. Here's the bounce right here. That's the bounce. Hold on just a minute. Yeah. Okay, here's what I was trying to show you is that this A, B, C, D leg came in right here. This was a perfect 382 right before the big collapse, taking it down to this level. Then the market bounced. We'll just go through because, see, this time it came back farther. We went all the way down here, all the way back up. So you'll see that retracement was probably almost exactly 50%, and now we're meandering lower as we go through here. Now, I wanted to talk to you just 1 second about a couple other things. That there's a lot of things going on that are really crazy, but this is the one that I really like the most here. And, well, this is the euro has just made a major top up in here. You can see it had a tremendous move down, beautiful 3 drive to a top pattern here. If you listen to the video, it showed you that we had taken out the November highs. That was during the election. Remember, there was a beautiful, look at this, perfect 3 drive to a top pattern, folks. It's just as symmetrical as you can possibly be. This was on Tuesday. I don't know Tuesdays and Thursdays. The time is so different, folks. I'm in a totally different time zone. Anyway, on the rally back today from the high, you'll see we went above the 382 by just a little bit, and now we're coming back down below it again. Whether that means very much or not, I'm not really sure, but that's what we're watching. Okay, let's take a quick look here now at the S&P here for a second, and we'll try to walk through some of the numbers that we want to be seeing here. Oh, guess what, folks? We might be looking at a rally here today. there's what looks at right here. This is my, hold on, get this out of here. Okay. Yeah, we're coming down here probably right when the middle of the day is here. We might have a pretty good rally, and we're going to get these rallies. We'll just have to wait and see. But remember, folks, a long-term daily, oh dear, sorry. We were talking about this a long time ago. Now we are through there. You see how close we are to the 61% retracement of that whole move, folks? That's it right there, off of that low right here on September. That is coming in right there. Excuse me. This is the low. There's the August. Try it again, Larry. Okay. You see these similar moves? Okay. We are below it right now. And where we're sitting right now, let me get rid of this one because it doesn't count anymore. There's the high. There's the low. This is major support where we are. We were within 12 points of it, folks. So let's see if it holds. There it is right there. Folks, I am praying. I mean, I'm really praying because what we're looking at coming in here to next Tuesday, Wednesday, let me see, what the 21st, I think that's the spring equinox, and that's also where we have the Big Bradley date that is so very, very important. So I'll show you that in just a second. But here's where we are right now. We just made new lows. We're only 10 points away, coming down very quietly. You don't see it's collapsing. It's coming down. There's buyers all the way down, sellers all the way up. So there's where we are right now, almost right there. I'm going to put the beeper in so that when it hits, excuse me, I'll know where we are, and then we'll find out whether that means, whether that means much or not. But we've made a perfect symmetry here. The problem is this, folks, and this is the problem. Here's where we're going back to. See, there's your August low right here. Okay, now look at the space between here, folks. See, we got all this to take care of, but we're not going to take care of it in this move. We're down one. I think it's fourth week down, if I recall. That's 1, 2. We're in the fourth week down. We're almost at the exact 61% retracement of this move right here. So that means we're probably getting ready to have a rally, okay? Now, it's my fondest hope that, well, we're really close in here. So how low do we get so far? The low has been, well, we're right at the low right now, 25. So we're looking at to come in around 18 to 15, I believe, 15. So, and it says it should be pretty close to the time we're dealing it right. Hey, remember, this time it doesn't work all the time, but here we are. We're almost there. That comes in here in about looks about 15 more minutes, and we'll see if that's going to be the one. It's following pretty closely. There was the high, and there should be the low, and we should rally the rest of the day. But folks, it's a bear market. What you want to see is a really nice reversal here, and the market rally nicely on Friday. Really, really be hard to do that. And then rally Monday, Tuesday, Wednesday, and Thursday. If you get a 3 or 4 day rally, really quiet, like the one we've just had in the NASDAQ, and then you take out that low. See, there's been no fear in the market, folks, and it's coming. Fear is coming. I mean, really fear, where you see it, gaps in prices, and there's vacuums in there and gaps and everything like that. All that stuff is getting ready because of this thing that Jeff Hughes pointed out to us before. And I'll bring it up to you right after we take this little break.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the S&P here. We're down 100 handles on the day. Nothing anything new anymore. But listen, look where we are right now. So let's have some fun here. We'll blow this up, and just like this, and we'll go like this, and we'll see how close A, B, C, D. Remember, the number we want to get here is 5516, I believe, 5516 or 15. Should be happening right about now. There's the A, B, C, D leg coming in right here. And there it is, right there. It says it's going to come in here at 12. That's pretty close to what we're looking at right around this time. Right now, 18 has been, when I looked at the number, it looked like it was either 18 or 14, but this should be pretty close to it if it's going to hold, and I'm not sure it's going to, but that's it. If we look at this on the daily, you'll see where we are here. Remember that number, 5518, because that says 5514. We're 5518 right now, and we have that little tiny thing there that tells us that, yeah, maybe this will work. I don't know actually, but we're watching it because sometimes it does work, and when it does work, it looks pretty good. Sometimes it doesn't either. Remember, folks, we are in a bear market. I will never see another high in the stock market, folks. I'm not going to live that long. It's going to be, well, at least 5 or 7 years to see where we are. We're getting closer. Just going. See how quiet it is, folks? This isn't collapsing. Somebody's buying this stuff. I just did. All right, let's move on here, and then that's what we're watching here to see whether this is going to hold or not. Now, remember, if this starts making lower lows here in the next 10 or 15 minutes, and we're below, say, 5505 or something like that, then I would say, well, you know, maybe this is not working, so you want to get out of Dodge. Don't be concerned about how much money you're going to make. Be concerned on how much money you're going to lose. That is what the real key is of what we're doing here as we look at all these things going through with all these charts. Okay, now I've got so many questions about so many things. I'm not able to answer all of them today, but let's take a look at some of these stocks that have been getting the bejeebies hit pretty hard. Let's take I haven't looked at these, folks, so these are all new to me. And get up here. We're going to take a look here at Apple. See, there's some really good stocks that are probably getting hammered too. Oh, look what they've done to this one. Look, there was your ABCD pattern right here, folks. You can see it's perfect Gartley. That was on the 7th, and then bang, bang, bang. We're actually down at some pretty good support here in Apple right now. Looking at this on the hourly chart, let's look at it on the daily so we can see it a little better. Maybe that'll be we're setting right at the one. Well, yeah, we're at the 1.27 of this swing right here. This is set at the wrong spot, so let me get rid of that, and that'll make it look a lot easier because it's too sensitive. So it's at major support here. Maybe there's an ABCD here. It's a little bit lower yet here in Apple, but it's coming into one. There's all this is saying, folks, is this is a 1.27 expansion of this swing right here. There's a 61, there's a 786, and now it is. This is where we are. A gap down today too, folks. That's why the thing is getting hit so very badly, but that's neither here nor there. Okay, let's take a look at Tesla. And I see Mr. Trump was testing a car. I read one yesterday. I'm sure he's never even been in a regular commercial car. He's always driven by what he calls chauffeurs all the time. So, and T is Tesla right here. And I imagine they're hammering this one again too. Actually, it's making a higher bottom. It's actually, this is an hourly chart. So here's the action yesterday, today's action it's still coming down, but holding up better than some of the others. And that's neither here nor there. Okay, now let me clean this up a little bit so that I can see what I'm looking at everywhere. And I want to go through. The main thing is that the U.S. dollar has changed quite a bit, folks. And that's why it's beginning to look like it's really got a chance, to move to the upside now. Let me show you the U.S. dollar index. I had it on here, but where it is, I don't know. Let me get it up here. U.S. dollar index. Shut the front door and raise her in here. Starts with a D. There it is. There's the dollar index. And we should be starting to pop up here a little bit. Now, this is, it's moving is here right now, okay? This has had a move here from 102 to 103. That's a pretty big move. Okay, now remember, this has gotten hit really badly. We went down and we went snapping through the old 50%. So the dollar is still in big trouble. And that's why the euro still might be a good thing. But this is what we don't know, is still really early in that. Correct? That's all we really need to know. By the way, on the gold, we didn't quite make 3,000 yet. It's 29.98 was the high so far. Probably make a higher high yet. But do you realize that the last 2 days open interest has dropped in gold? Folks, I don't care whether it's going to go higher 3,000 or not. This thing, I wouldn't buy this if they let me trade it for free. Okay, so that's mainly the main reason I'm, bringing that to your attention, because it's that's one of the things that, Leo Malabad, when he worked with Byron, and I didn't work for him, but I was always around the office, delivering papers or cleaning up the room. He always talked about, you've got to have players in the room. And he said, if the open interest is dropping, prices are going up, he says, that's as bearish as it gets. It means that the shorts are covering, and that's when the problems lie. Now, this thing's going to go up for a long time on short covering, folks. So don't think that there's a top up in here just because we saw something like that. That is not necessarily the reasoning behind it. Okay. Now we want to take a look at the silver chart, because silver's had a big run here, and we're breaking out into new high ground, as I heard on the tube here today, to get the weekly chart up. And sure enough, by golly, we did break into new high ground on a weekly basis. Here's where we are right now. It's a little off its high compared to the gold. Anyway, there's the ABCD coming up here. The old high here was on the long-term weekly. Remember, that's a really big one going way back here, folks. Back in when we were in Hong Kong, it hit 50 there in August in Hong Kong of 2011, and there's that stiff resistance that you're running into in the silver at this level right here. That's my 2 cents worth. And as I always mention, if you overpay more than 2 cents, you've overpaid. All right, now I want to go over a few commodities just for technical reasons. All right, let's come up here, something that we've been bullish on for quite some time, and that is the cattle. This is April cattle, and it was a beautiful pattern, down for 2.5 weeks. And let's get this up here. This is how you learn. Oh my goodness, look at this thing today. Went right up to the 786. There was the 50% retracement of this whole move right here. Okay. There was the 50%, from this low to this high, 50%. If we did the smaller move from this move right here, it stopped almost exactly at the 61. And you see this move right here, folks? This is the kind, you're going to see them on the upside, you're going to see them on the downside. But let's switch over to a smaller time frame, like 13-minute, and just watch what happened to gold. Okay, look. It might be as expensive as gold, but it's not. This is cattle. We got to take a break, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I believe we have Jeff Hughes from Alpha Insights in the room today. Jeff, are you there? Well, I guess we don't have Jeff today. He said he was going to try to make it, but given all the volatility, I'm not going to worry about it. We'll try to have him on tomorrow after we do the live trading tomorrow. We'll try to have Jeff on. So let's get back and talk about always stuff to talk about. Of course, get the charts back up so we'll be able to see everything. This was the cattle. I wanted you to see here, folks. There was your first. Someone's calling me 1 second here. No, evidently he's not here yet. So I hear a bell, but I can't see anything, folks. So you're going to have to tell me what it is. I don't see any messages or anything, so I don't know what to do. It's like I'm being in school here. Jake, let me know if you're listening to this. It's like a monkey washing a coconut. I hear the bell ringing, but I don't know what a bell ringing means. I really don't. I don't have any idea what's going on. I don't know. Let me see here. This is no, I don't see anything here that makes me even think that I know what's going on. Well, I'm going to just keep talking. I don't know who I'm talking to, but anyway, this was the cattle today. You can see we had a really nice ABCD pattern right here. Again, pointing these 382s. There's one. There's a second one. There's the third one right here. And that led to this, well, let's draw the 3-drive pattern in from this level right here. There's your high, first high, second high, third high is right there exactly at 127, and it's down $800 from the opening already, so it's starting to back off from this level right here. Okay, the S&P just now made a no low at 1515. Let's take a look at that.
Hey, Larry, it's Jeff. Can you hear me?
Yes, I'm here. Hello?
Hello,
is that Jeff?
How are you? It is.
Ah, Jeff. There we go, buddy. Sorry. Go ahead, my friend. This is a monkey washing a coconut time here. So we're talking about the bull market bottomed on the March 23rd. I think we're a bottom coming up again, my friend.
Well, I put this on here just, recall that 5 years ago during this very month, we saw a massive panic in the market during COVID. The S&P was down some 28%, the NASDAQ down 38%, and both markets bottomed on March 23rd. That's in 10 days. So we may have another 10 days of fun to go. I like to say, if you don't know where you've been, you can't know where you're going. This is just a snapshot of equity returns and some other assets year to date through last night's close. And as you can see, silver's up over 15%, gold's up almost 12%, and foreign stocks are up 7%. All the U.S. markets are negative for the year, with the S&P now down 5% through today. The average stock's down about 5.5%, almost 6%, and the median stock's down almost 7%. Bitcoin's got eviscerated. This is down over 10% year to date through last night, and I think it's going much lower. So all these things are very correlated right now, and being led by the NASDAQ.
Okay, now the valuations. You want to talk to the folks about this? This is I always talk about the chart you sent us 6 months ago about the overall of the margin levels, are into the stratosphere.
Oh, we'll get to that.
That's where the real problem lies.
I agree. We'll get to that. Valuations first. It's hilarious. I heard on CNBC this morning, hey, the stock market's down 10%. It's cheap. Oh, really? The Shiller Cape ratio is still at 35 times, just below its all-time record high. The book value is still at 5 times. That's a record. Price to sales are at 3 times. That's an all-time record. And the dividend yields, sub 1.5%. So, by no means is the stock market cheap right now. It is excessively valued and very, very close to its record highs.
Yeah, this is the one. This is my favorite one, is this margin debt. Boy, this is where the problem lies.
Yeah, in January, it hit an all-time record high. We haven't gotten the February data yet. It's reported 30 days in arrears. But, I like to tell people, hey, if you've got a condition of high valuation plus high leverage, and it's never been more levered than we are today, then you got a high-risk market. And the interesting thing here is if you take a look at cash balances, they're negative, okay? So if we take a look at the net between margin leverage and cash on hand, we've never had less cash available, almost negative $600 billion. And this is about more than three times greater than the negative cash balances that existed back at the peak of the great financial crisis right before that unfolded and the peak of the tech bubble. So, you had these real estate bubble and tech bubble peaks with only negative 200 or 300 billion. Now we're at around negative 600 billion. It could be an absolute calamity from here.
Mm-hmm. Yeah, it seems that's where people don't realize that. You look at the long-term chart where this market's been, you can go back and retrace some of that. So we're talking about the sentiment, historical data. Jeff?
This is the other thing I hear, Larry. Everybody talks about how pessimistic investors are. Well, I agree. If you take a look at the AAII survey data, we had record bears on February 26 at over 60%. The problem is investors haven't sold yet. Take a look at their stock allocations on that same day. They're well above average. It's almost 68% net long. And so the average is only 62%. So they're overweight equity still. They haven't sold despite the fact that they're pessimistic, which tells me that there's a lot more damage that can be done once some selling gets done.
Wow. I love your letter, Jeff. Folks, if you don't subscribe to this man's letter, you're missing the good thing, because, boy, he's got some great stuff in there about statistics in the market. And look what's happening. He said this was going to happen, and here we are. So where do you think we're heading, buddy?
Well, like I said last time I was on your show about a month ago, the market was trading at 61.17, and I thought it would go down and test the 200-day moving average. Well, we've gone through that level now. So that tells me the simple fact that we broke below that August 26 high in the 200-day moving average, we are now in a bear market decline. So this is going to get a lot worse before it gets better. I think the market definitively topped at 61.47. I do not think we'll see a new high for a very, very, very long time. If this is the initial decline, which I think it is, we're only in the very early stages of minor wave 5 down, of intermediate wave 1 or A, depending how the pattern ultimately trades out. But 5 waves down have yet to be completed. And my suspicion is that we'll get down to at least 5,400, possibly 5,100 before we see a durable low in place.
Stay, folks. We got more of Jeff Huge coming up. Alpha Insights. We'll be right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Jeff Hughes talking about the NASDAQ 100, confirming the top. Well, looking at it today, that certainly looks like a top to me.
Yeah, you know, from our perspective, I think the 22,222 high will never be eclipsed in our lifetimes. And I'm 59 years old. I mean, the caveat being maybe I live to be 100 and we get back up there someday. But at this point in time, we have broken significant trend, both on a 200-day moving average basis and, you know, just a basic trend line looking at the lows since the 2023 low. We've taken out key chart support levels, and I don't think we're going to stop going down until at least 18,500, where I think maybe that might mark the intermediate wave one down. But we got 5 waves to put in place, so a kickback rally might only carry back into the 20,000 level. I doubt it will exceed that. But if it did, maybe it could carry back to test that trend line around 20,500. It all depends when it begins. I don't think it's beginning anytime soon. I think we got at least another 10 days of serious damage ahead of us. So I would be looking for 18,500 initially on the downside. And by the way, that view of the S&P that I showed you, that's my bull case. The next chart shows a little bit more bearish view. And it's still just getting started.
Yeah, wow. Holy cow, that's only the last 5 years, for heaven's sakes. What if you go back to 2015 or 2009? My goodness.
Well,
wow.
it's a cycle wave top, you know, and so what I've been trying to help people understand is that this isn't just a garden variety correction. This is the beginning of a super cycle decline that could carry on for decades plural, 20 years. In other words, write this down, folks. You may never, ever see a new high in the S&P 500 beyond what we've already seen. This chart indicates that maybe what we're seeing right now is just minor wave one down, not intermediate wave. And this might carry all the way down to the 50% retracement of the entire bull market advance off the 2022 lows. If we got there, that would coincide with the prior primary wave 3 high, which was the 2021 high, as well as a trend line off that 2020 low and 2022 low. So all of that coincides again with the 200-week moving average that should continue to advance and flatten out up around 4,800. So, I'm thinking around 4,800 is really where we're going to get some significant support to this initial decline. I call it the initial decline because it'll be wave one or wave A of a 5-wave decline or 3-wave decline that should be an absolute wipeout. I mean, a merciless decline.
Mm-hmm. Well, it certainly started that way. As you can see, it's different than any of these other tops. So, well, except for the one in 2000 when we had COVID. Okay, let's move on to our next one here. And that is the 500 and the gold breaks 20-year moving average.
Yeah, this is a ratio of S&P 500 and gold. So the S&P 500 divided by the price of gold. And we had kind of been in this stable range for the last 5 years, but we just broke below chart support, which was the 2022 low, and the 10-year moving average. The last time we were below the 10-year moving average was pre-2014, and that typically marked the structural moves in the market. Above was a structural advance, below is a structural decline. I think we're now seeing a structural decline in the relative performance of S&P 500 to gold. And if we just got down to that advancing trend line, that ascending trend line off the 80 and 2011 lows, that would be a 35% underperformance or negative 35% relative performance for stocks versus gold.
Wow. And here's commodities setting up for a big move. Boy, it certainly looks like it, doesn't it?
Just by the way, if S&P does pull back to 4,800, that'll be a 22% decline off the top. Even the people on TV will then declare that it's a bear market. But it's too late. Maybe it's not. Maybe we're going down, 50, 60, 70%. So just losing 20% won't seem so bad. But, what this chart's really showing you is that if you look at commodities divided by equities, so the S&P ratio, it's been putting in a nice bottoming pattern. You got a low, a lower low, now a higher low, and it looks like we're starting to turn up. And that is corresponding to a peak in the U.S. dollar, real trade-weighted dollar. So we're looking at disinflation adjusted. And that tends to peak inversely with bottoms in commodities versus equity, so that ratio. And so, I think we've got another situation here where we could see the real dollar collapse and we could see commodities absolutely explode to the upside over the next decade.
Okay, and then U.S. gold reserve. Did you ever find out there was gold in Fort Knox? I heard it in the news that they were looking. I don't know if they looked in the right place.
Yeah, I don't know if they have yet, but I'm pretty certain that there's plenty of gold there. Unless Goldfinger got to it, right? This chart gives us an interesting story here, okay? So when the United States entered World War II, its gold reserves as a percentage of government debt were approximately 40%. But by the end of World War II, U.S. government debt to GDP had already soared to around 50%, pre-World War II to about 120% by 1948. And in 1972, when Nixon took the country off the gold standard, gold reserves as a percentage of government debt had been reduced down to around 10%, but the government debt to GDP had also shrunk all the way down to around 35%. So now fast forward to where we are today, the U.S. government debt to GDP has steadily moved higher to now exceed its prior post-World War II high, and is now and now U.S. gold reserves are just 2% of U.S. government debt. So, what we're saying here is that if the U.S. gold reserves were to move back, if they were to equate to 40% of U.S. government debt again, that would imply a $55,000 per ounce spot price to gold. I don't think we're ever going to get to 55,000, but it suggests that, the relative, price of gold relative to government debt is extremely low, and it will be going higher. Our immediate target is $4,600, but we think it can get to north of 8,000 over the next, say, 3 years.
Wow, that's a big move, my friend. Very, very big move. Tell us about your wonderful newsletter, my friend.
Well, first, let me give you an offer. I'm going to offer all your listeners an opportunity to get a free report. Sign up for our newsletter at hugeinsights.substack.com, and I will send you the report that we published yesterday identifying an unbelievable opportunity in silver mining stocks, which we think are going to outperform dramatically.
So that's hugeinsights.substack.com, folks. Don't miss it. It's a great publication. Even if it's free, even if you pay for it, it's great. Jeff, thanks for joining us, buddy, and be safe.
Thank you, Larry.
Jeff Huge, folks, Alpha Insights. We'll be right back after the words from our sponsor.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is what the prediction is. The problem is the last several hours of the day sometimes is not as good as the first hour. As you can see, during the first hour, it was pretty good. It was off by a little bit off the high. It might be off by a little bit. What we could do is sometimes I'll just shift this over because it has the right feel. Move this over like that. No, that doesn't work. Move it over here. Now, just got to leave it like it's supposed to be. What I did, folks, here, I bought it at 15 just based on this long-term daily chart. There it is. The low's been 09. So what I did, I put a 10-point stop on it. I bought it at 15. And I put a stop at 05, and that's all I'm risking. I'm hoping, and that's a terrible word for gambling, or speculation is for a nice little rally here, Wednesday, Thursday, Friday. Well, and then, let's do these Friday, and then early in the week, the 21st, folks, is coming up here. That's right there. Okay, now the way it's coming down is we're going to have a big washout down here, probably maybe way below this, but it'll give some great buying opportunities. Okay, I don't know how long it'll take, but if it does, it could be a really spectacular time to look. So the key date is that Bradley date. I think if I can show it to you somewhere in here, you'd be able to see it. And guess what? I can't find it. It's I've got so much. Here it is. Shut the front door. Now it's turned upside down, folks. There's April 21st. That's the number right in here. Now we've been going down since January and February. See, so this is inverted. See, Bradley is good about turn dates. It doesn't tell you the direction because it can invert. And this is inverting. This means that we're going to have a pretty good rally that might last 6 or 7 months. So that's why I'm so interested about this date coming up. And folks, I'm not talking about 5 days before, 5 days after. I'm talking about the 21st of March. It'll be 1 or 2 days. That's about it. Live every day in an attitude of gratitude, and may God bless. Try to join me tomorrow, folks. Live trading from 9 to 12, New York time. Jacob at TFNN if you're interested.